Welcome to an exciting adventure in real estate with your guides and hosts of the Investor Guys podcast, Mr. Bill Barnett and myself, Kevin Mills. How you doing, Bill? How you doing out there?
I'm
Real estate
doing
world?
incredible, sir. Good to see you this morning. Got your Superman glasses on, looking
Yeah,
looking
you know
cool.
what? It's weird because when I moved here 4 years ago, it had nothing to do with Florida. It was just because I'm getting old, but didn't need glasses. Just in the last the first year I was here, I started needing them sometimes to read like the small print, and now I need them if I'm looking at anything that's within about 2 or 3 feet of my face. Beyond that, I'm perfectly fine, but just anything that's within that 2.5 foot range, I need glasses on, or it's just all blur for me. So
Yeah, I when my eyes get tired, I have to wear mine, and mine look very similar. They're black and thick, and so today one of the things I didn't have to have my glasses for because I can blow the print up was I was looking over some tips about how to successfully get your investing off to a good start, and if you're a seasoned investor, some things you might need to remember. And one of the things that is great is about this list is that it's a list that's not just the normal stuff. There's some of the normal stuff on there, but I would say it's more of a almost a secondary top 10 because it hits the type of things that we normally don't hit them. Now, with I had told Kev I'm on the phone today, so Kev, you're going to have to handle the breaks today as to when we get there. So,
no worries, no worries. So let's go ahead and just dive right in. Usually we banter a lot back and forth and talk
yep.
about things that are just not related to what we're going to talk about. Today, let's change it up and just dive straight in because I know you're on the phones.
Great.
I got to get out of here in a little bit myself for some meetings, but let's dive in. I'm going to toss it over to you.
Well, so there's a couple of things. The first one, so both of these can be applied pretty much to rental or flips, either one. A couple of them will be specific, and we'll mention that as we go. But one of the first things is, especially if you live in a major metropolitan area, is look for either rentals or flips, either one, in what's referred to as emerging markets. So you catch the wave of a market that's turning and moving upward, a market that is revitalizing, a subdivision that's being regentrified. Investment money is coming in. I've got a property over close to Love Field in Dallas right now. And when I went over and looked at it, my initial response was, it's a pretty rough neighborhood. I don't know that I want to invest in here. But when I started doing the market research on the area and on the neighborhood, I was shocked at what prices were going for and how quickly prices had moved. And as I started to drive the subdivision to just see what else, if anything else, was going on in the neighborhood, there were 2 or 3 scrapers that had already been rebuilt or built. There were 2 or 3 properties that you could tell investors owned and were being rehabbed. So I felt a lot better about it. So it's what we refer to as an emerging neighborhood. Catch the wave of upward pricing trend in a particular neighborhood. This is not the market in general. This is very micro processing or micro investing, looking at a specific subdivision that has been is regentrifying. So it's an emerging subdivision.
Yeah, and if you don't mind doing the legwork and spending the energy to do it, all of this information is available really at your fingertip.
Yeah.
You could do Google searches and everything else. Literally, some of the information I was looking at just this last week included markets that have the most past due rents and markets that have the least amount of past due rents, and it had the top 20 of both. And if you're looking at a rental market for traditional rental properties, not necessarily Section 8, because Section 8 is paid for by the government, but if you're looking at traditional tenants that are going to be paying your rent, that might be one of the things that you would want to factor in. One of the most competitive, a new story that I saw because I live in South Florida, one of the most competitive rental markets, actually the most competitive, it topped the list, is Miami. So if you want a market where your unit is going to be rented out in less than 30 days, that's the average time for a rental in Miami. And that's huge when you're talking about something that's not Section 8, because Section 8 has a huge demand for it. So Section 8 usually you don't have 30 days. But when you're talking about a traditional retail lease that you've got people moving out and moving back into a unit in 30 days or less, that's huge. So market in Miami is one of the top. The average last year for Miami was 43 days. So it was still a competitive market, but it took for being one of the most competitive markets. Now, you have to decide whether or not you're going to be able to get a good deal in Miami or not to be able to lease it out or not. That's something you're going to have to do the legwork for. But the information is out there. All you have to do is decide you're going to do it, make the effort, figure it out, and figure out, make sure you're comparing apples to apples and oranges to oranges. Don't say, okay, well, apartments are doing this and I'm going to go ahead and get a house, so it should do the same thing. No, that absolutely two different animals. They will be very, very different in many, many different ways. Make sure you're looking at apples to apples. Don't say, well, Miami's blowing up, so, Okeechobee must be also, or Indiantown must be also. No, we're talking about very different markets. We're talking about very different areas. Is one of the markets that is blowing up also. Make sure you're comparing apples to apples and oranges to oranges. Now, we're up on a break, but we'll be right back.
Thank you for watching the Investor Guys podcast.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at CaymanK.com.
Absolution X. Lifestyle apparel like no other. Limited editions. Unique, exclusive designs. Seek your absolution. Get yours. Only at absolutionx.com.
You are watching the Investor Guys podcast.
The Investor Guys podcast will be back shortly.
And we are back. And today we are talking about emerging markets and doing your homework, which is really an essential part of being a real estate investor. Doing your homework, no matter what strategy you plan on using, no matter where you plan on investing, no matter what you plan on for your exit strategy, your research and your homework are very important. That is going to define what you buy, where you buy, how you buy it, and what your exit strategy is, how you're going to get out of it.
Well, and it also helps you with the comfort level of your investing, especially if you're on the newer side. If you know more about the market, and look, when we start talking about knowing about the market, we expect you to know what's going on job-wise in your market. How's the job rate for this part of the city? Is there anything happening close to where you are that's going to have an impact? Are there new plants coming in? Or are there new headquarters buildings coming in? Are places expanding? You need to know those kind of things, because all of that creates and brings with it additional housing demand, which is what we're looking for. So when we're talking about know your market, you want to know what's the average days on market for the area that you're looking at. So every city, Kevin lives in a huge market, Miami. I live in a huge market, Dallas, Fort Worth. Well, gosh, Dallas, Fort Worth is made up of probably 50 or 60 submarkets. So obviously Dallas, Fort Worth, those are huge. And you got Arlington in the middle. And Arlington's got 250,000 or so people in it. But then you also want to look at, hey, all of those little smaller communities, they have their own days on market. So you want to know what the average days on market is in the area that I'm investing in. It may be what the city average is. It may not be. Yeah, so I want to know that going in. So I've got my job environment going in. I got to know a little bit more about how long is a property likely to sit on the market, and remembering that that number is typically based on, is this house in marketing condition? Is it ready to sell? And is it priced correctly? Because those are typically the only things that we really find wrong with a house that starts getting long in the tooth on the market, is it really wasn't in selling condition to begin with, or in rental condition to begin with. It needs to have, if you're selling it, it needs to pop. It needs to have something going on with it that just knocks your eyes out. And I'm going to tell you, I found this little thing, free website I got to tell you guys about, Kev. Literally, I played with this thing for 2 hours yesterday. And on one of the properties that I mentioned I have a property over by Love Field. And on that property, completely changed what I was planning on doing to the exterior of the property based on this free program. And it's called Hover, Hover. It's hover.com, but put / designs in it. And it is a free design software. So what you can do is you can take a picture of your property and upload it into their program, and AI will start creating, here's different ways you can do it. And it has about 8 or 9 different types of design. Now, so this is a house that was built in the 30s. So it is a craftsman style. That was a very common style in that time frame. This is one of those houses. Craftsman was one of the things that one of the categories or design tabs that they had. So I uploaded it, and it just in a matter of minutes, it took about 15 or 20 seconds for the first renderings to start popping up. And these are photorealistic renderings. These are not like sketches. They are high quality. It looks like, oh, this is what the house looks like now. No, this is photo rendering, and they are huge. Again, it's Hover, HOVER.com / designs. Fabulous tool.
And Hover has a lot of other tools as well to check out while you were there. So,
yep, but fabulous. So yeah, and so one of the other things we want to look at is diversify your location. So not only should you be able to look at different parts of town if you're in a big area like we are, but also as you mature as an investor, you can look at, can I go somewhere else? Kevin and I are in multiple cities. Where else can I go? What other hot markets do I want to be in? Or is there a market that I want to be in because that's where I want to be, like the beach? Do I want to own beach rentals? So I may be able to have a property, an investment area that I go into just because that's where I want to be. I love Hawaii. I don't own any property in Hawaii. Probably not going to buy any because the flight's too doggone long for me. If I'm going to do that, I might as well buy in Belize or somewhere like that was actually closer by a couple of hours than going to Hawaii. And that's the kind of stuff. And we're looking at that stuff right now. We're looking at buying on either the Florida West Coast or the Mississippi, Alabama coast. So yeah.
And as we go into this break again, remember, apples to apples, oranges to oranges, even in your market. Bill's talking about submarkets as we started going in here, and he's talking about his property in Love Field. His property by Love Field is still in the Dallas area, but it's going to be very different than what's going on in Farmers Branch or Addison or Preston or even Turtle Creek.
Yep.
Don't just say across the board. A lot of times we read these articles and we see this information, and it is an average for the entire city or the entire metro as a whole. It's not specific to the areas. We can find that information because in this day and age, everything has a metric to it. We can literally hone that down to specific neighborhoods inside of bigger neighborhoods. And if you need help doing that, contact the real estate agent or the real estate broker that specializes in that area. Now, one thing that we find a lot of times when we find real estate agents and real estate brokers is they just want, they think that they want a bigger piece of the pie, so they try to do everything. But when
Yeah.
you find somebody who specializes in a particular type of property or a particular market, their knowledge is worth millions of dollars if you want to tap into it and use them as a resource, because it is to their benefit to understand the coming and going. Use the knowledge that they have, use the homework that they've already done, use the effort that they've already put in to benefit you, and then benefit them by making sure that you do your purchases through them. Now we're up on
Yep.
break. We'll be back in just a minute.
You are watching the Investor Guys podcast.
Absolution X. Lifestyle apparel like no other. Only at absolutionx.com. Get yours.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at caymank.com.
You are watching the Investor Guys podcast.
The Investor Guys podcast will be back shortly.
And we are back for our final segment on this edition of the Investor Guys podcast. And today we are talking about knowing your market, but also being on the lookout for emerging markets. And your emerging markets literally could be in your own area. And if you live in a metro area of any significant size, okay, there is going to be at least emerging neighborhoods. Okay, there are neighborhoods that go through a gentrification process. That is an emerging market. There are neighborhoods that are going to be close to, say, a new manufacturing plant or a new business that's going to be opening up. That is an emerging market. Pay attention to what is going on in your own backyard, as well as what's going on in other parts of the country that you may be interested in. So Bill mentioned that he's looking at properties on the west coast of Florida and the south coast, and basically the Gulf Coast area is what he's looking at.
Yep.
He does not have to have that property for a flip. He wants that property so he can use it himself, because Bill has a lot of attachment. Bill likes that area. He has a lot of fond memories that go with that area.
Yep.
Bill can use that as a vacation rental. That property can pay for itself and put money in Bill's pocket. And then whenever Bill wants to, with his family or with his significant other, spend some time there, he just blocks out that time and he goes that week or that month or whatever else, and he's staying in a property that has already been paid for, that is not necessarily free and clear because he probably has a note on it, but it's not costing him anything for his vacation rental. He had to pay to get there, he had to pay to get back. But remember, this property is putting money in his pocket. This property could have paid for its vacation right there. We do the same. We have properties in Orlando that we spend time at. We have properties in the Keys that we spend in time at when we want to go. The funny thing is we decide last minute that we want to go, and we find out that we can't because we have bookings already, especially in the Keys.
Yeah.
So if you have a popular property, you got to make sure that you book it almost a year out in advance, which is what we have our bookings for. But it's a great way to make money, and it's a great way to also travel. One real quick note, and we've kind of like spun this in a whole different direction. When you take that vacation at that property of your own, that vacation is also a tax write-off. That is a business expense because you are going to one of your properties, one of your assets. You're going to, when you're there, you're going to check it out. When you walk in the door, you're gonna be like, oh, you know what? I didn't remember this paint was this color. I think it probably look better with the yellow, or these baseboards need to be redone. You know, when you go there, you're gonna, and this kitchen, I think we could probably make more money or attract more tenants if we redo this kitchen. So you're going to be making decisions there based upon your property. You're going to be doing research while you're there so that you can add more information to your listing. If there's a new
Yep.
restaurant in town, that's great. Put that in your listing, close to Bob's Burgers, best burgers in wherever. So make sure that you are adequately writing that off on either your taxes or your expenses, depending upon whether you're set up as a corporation, an LLC, or as just a individual. Anything to add, Bill?
Yeah, one of the things we want to be careful about, and this is for all investors, is not over rehabbing a property. And this is a very fine line between art and science, guys. So when you're looking at what you're going to do for your property, everybody uses comps, comparable sales, but you also want to look comparably to what's going on inside on these properties. So when I pull my comps, one of the things I always want to do is I look, so let's say we got 3, 4, 5 comps, and it's really all you need to be able to have a good solid number. But I also want to make sure that I'm looking at all the pictures, guys. So I use realtor.com a lot. Kevin and I both have MLS access. I'll talk a lot about realtor.com because everybody has access to that. But I'm going to pull those properties up and I'm going to go through those interior pictures and I'm going to say, okay, this house is much more of a truer comp to what my house is going to be because this house was rehabbed and done really nicely in the last few years, or it's on the market right now, or whatever. So that I've got something that has a like feel, a like design quality to it. Doesn't have to be the same kind of style, but quality to it. But I can't turn around and overspend. So this really becomes much more of a science. And I always defer to ladies on this because they have a much better palette typically than us guys do on design, can see flow of a property a lot easier. But you also have to be careful in listening to them because a lot of times I'm just dealing with this right now with one of my consulting clients whose wife has incredible taste. And I'm like, hey, dude, she is spending you out of your profit in this property. Everything she's doing looks fabulous, but you're way ahead of the market for this house. So it's a $650,000, $700,000 house, but she is finishing it out as if it were in that 1.2 to 1.5 range, and it's going to be drop dead gorgeous. But I get concerned about the amount of profit they're making because of how they're, in my opinion, over rehabbing the property because you don't get that money back. You get to a diminishing returns point, and that's what you want to stay away from. You want to push right up to that line, but you don't want to go over it. Because if you do, then you've over rehabbed and you're not going to get that money back. So be careful about that, whether it's rental or whether it's flip.
Breaking it down and really getting to what's important is emerging markets. You really, by the very nature of an emerging market, you've got property that is going to be increasing in value. So emerging markets are a good, solid, sound investment, whether you're buying a flip or whether you're buying something to hold and sell later for more money, or whether you're buying a property that is going to be in demand that you're going to have tenants for. Because if it's an emerging market, people are going to want to move into that market and not necessarily going to buy a house. They may want to rent a house. Second takeaway, as always, get started. If you're not getting started, if you're not already started, all this stuff that Bill and I are talking about, all this advice that you're getting from us is absolutely worthless to you. You're wasting your time. Get started. If you just need to sit and watch us, that's fine. We're happy to have you. But unless you get started, you're never going to get to where you want to be or where you think you want to be. And the other thing is do your homework, do your research, make sure that you know what you're looking at. It all boils down to making sure you have, we talked about puzzle pieces the other day. If you've got all the correct puzzle pieces, and the way you find those correct puzzle pieces by doing your research, by doing your homework. If you have all those correct puzzle pieces, they fit together and you're making a profit, then it's a no-brainer deal. Do it, no matter what. If you have all of those correct puzzle pieces, and Bill and every other investor who knows what they're doing will tell you, oftentimes you have every single correct puzzle piece. In fact, you have more puzzle pieces than you have on other properties that you know are profitable, but you just cannot make the picture work because it will not bring you the ROI that you want or an ROI at all. I've seen investors buy properties because they thought they looked great. The puzzle pieces looked good. The picture that the puzzle created was beautiful, but they were upside down. It was a negative investment. Make sure you have all the correct information, and most importantly, make sure that information is pointing in a direction of ROI, the ROI that you want. If it's not, walk away from it, because there are plenty of deals out there. Bill can tell you, any other real estate investor can tell you, plenty of deals out there that have the right metrics that are going to give you the return on investment that you want.
Yep. I agree, sir.
Anything in closing?
That's it.
All right.
Great tips, brother.
Thank you for joining. Great conversation as always. Always love being here, chatting with you. Always love hearing from you guys as well. So make sure you contact us, Bill at investorguyspodcast.com, Kevin at investorguyspodcast.com, or just general questions to contact at investorguyspodcast.com. We look forward to seeing you back here again soon. Happy investing.
See you, everybody.